Welcome to GoGoPreneur, where Gogo Bethke, your host, interviews badass rock star entrepreneurs of the world, figuring out who they are, how they got to where they're at, and the lessons they learned along the way, so you can learn those lessons and turn it into money. Let's go get them.
Taylor, thank you so much for your time today.
Sure.
Let's get started. Let's figure out what is fractional real estate. How did you come into this side of the world?
Yeah, so I actually met founder of realbricks.com. Took a job with them about 2 months ago, and I honestly I had never heard of fractional real estate before. It's a totally new concept to me. I probably like most people, but it's a fascinating concept where basically, if you guys are familiar with Robinhood, people go on. You used to have to just buy stocks at their full price, and it left a lot of people out of the market and unavailable to purchase these stocks. So they're super high priced, right? And so what Robinhood did was they fractionalized stocks and made it easy so that if you wanted to invest $5, $10, $100, whatever you wanted, you could buy fractions of those stocks. So similar concept, fractionalized real estate is just as you would imagine. You can basically, instead of having to buy a full investment property or a home just yourself, you can buy fractions of the home. So 1%, 5%, 10%, or even $100 worth. And so basically, fractional real estate is not an entirely new concept. I know, traditionally in the real estate world, like you'd find people that have, you want to say, hey, let me go find 5 people that want to go into this deal with me. And then we can figure out, okay, we'll pull the money together, we'll purchase the investment, and then we're all in it together. Right. Problem with some of those is that, like, one, finding some of the investors to go in on some of these deals with are tough to find sometimes. It can get a little messy too, in terms of, like, okay, who's putting in what? If you've got one person putting in 50%, one person putting in 30%, doing all that. And then also the biggest piece, which I think kills most of those like private deals, are the fact that, like, a lot of people have different exit strategies and timelines for their investment, right? So like some people would say, great, I'll put in 20K and I want to have my money out in 3 years, but someone else may put in 100K and want to hold it till it sells. Like a lot of these traditional, like fractional or like crowdfunded real estate investments, they take the only exit that you really have is either to find someone that will either purchase your shares out of you, which is tough to do, or you have to sell the property. And a lot of times getting 5 to 10 people on the same page of when that happens, it's really tough to do. So fractional real estate is a pretty cool way for masses of people to jump in at any price point that they want, and then let platforms like RealBricks handle everything else, so that you can say, hey, I want my money in at this point. Here I've got, let's say, $1,000 to invest. You can buy and hold it for as long as you want, and then when you're ready to exit, fractional real estate and fractional real estate platforms like RealBricks allow you to exit on your own time versus waiting for everyone else. So it's not a totally new model, but I don't think a lot of people are aware that it exists in the real estate space, which I think is really cool.
Yeah. So you already mentioned the website RealBricks. How did it come about? Like,
so our founder,
why?
Chris, I think he, in terms of why it was founded, why he decided to start this platform was, I think, looking at primarily, like, a lot of millennials, or even just most Americans, they've been pretty much priced out of the real estate market, right? Like if you wanted to buy an investment property, unless you've got a spare $60,000 laying around, it's really tough for someone to break into this market, right? So the highest performing asset class in arguably history is completely out of reach for most Americans. And that sucks, right? Most people play in the S&P 500, invest a little bit when they can in the stock market, which is a great way to build wealth. But, real estate, as obviously, is like one of the best ways to build wealth. But for most Americans, that's not a feasible thing. So our founder kind of looked at this and said, hey, there's got to be another way around this. And so he went through a super long, tech development process to be able to do this, but also like a legal process, right? Because the SEC has to come in and approve all these things so that the general public can buy and sell shares of real estate. He went under this kind of 3-year journey of figuring out how to solve this complex puzzle to be able to offer people the general public real estate investments at a fraction of the cost, without having to deal with, finding the right deals, going to the property, purchasing it outright, finding tenants, managing the tenants, the maintenance, the repairs, the taxes, all of the things that come with like kind of the burden of investment properties. He really wanted to create a really simple way for everyday Americans to just show up, be able to pick the properties that they want to invest in, and invest with the swipe of a finger or a click of a button. And so, his kind of dream over the last 3 years has become a reality. And now that RealBricks exists because of that, because he wants to help serve, the most of the general public that have never been able to access before. So the mission really, when you boil it down to it, it's democratization of real estate for everyone, right? And so I think it's a pretty cool, again, it's a reason why I kind of came over to this, because I think it's really cool, because I know a lot of people that are still waiting to buy their first home or want to buy an investment property and have never been able to until now, until RealBricks existed, right? So it's a pretty cool mission, and can help a lot of people start building wealth or diversifying their portfolios away from just the stock market. Because as you know, stock market, while it's great, it can have really great days. It can also have really, really bad days. And it's a great, a great way to diversify kind of the mix of things that you're looking to get into. And yeah, just give people like access to an asset class that has been pretty unattainable for years.
So what money are we talking? Are we talking thousands of dollars you need to have in order to invest, or where can someone start?
Yeah. So what's cool with RealBricks is you can get started with as little as $100. So shares are, I think they're $10 a share, and the minimum investment's $100. So, I think a lot of people have probably come across the ads like, hey, are you an accredited investor? Then great, you can invest in these commercial deals, right? And like, most people are not accredited investors or have a net worth of $1 million. So what's really cool is, RealBricks, you go to realbricks.com or download the app. You like basically can sign up in 2 minutes. I think we clocked it. That's what it takes. And then, you basically browse the marketplace for some of the investment properties you want to look at, and then you can buy shares for as little as $100. And then if you're looking to invest more, and you're maybe more of a seasoned real estate investor, or you've just got more capital to play with, you can invest. I think it's up to 9.8% is technically what the SEC allows for a fractional real estate model. So, anywhere between $100 and up to like $40,000, $50,000, you choose. Like, basically it's up to you. You can put it on a recurring schedule. So if you want to invest $100 a month, $5,000 a month, or, $40,000 one time, that's the cool part about RealBricks, is the choice is up to you, how you want to invest.
So let me understand this. So you said 9.8%. Is that 9.8% of the total value of a specific property? So you cannot own more than almost 10% as an individual in that specific property?
Exactly.
But you can own 9.8 up to 9.8% in 10 different properties. You just cannot own all in one.
Exactly. Yeah. So you can own 9.8% of all the properties on the platform if you wanted to. I mean, it's a great diversification tactic for, let's say, like real estate investors that already have, rental properties that are cash flowing in their own zip code, but let's say they want to break out into other markets, let's say the Midwest or something like that. Like it's a really easy way, without you having to go find the deals, source, manage the tenants, do all of those things. You can then go find these other markets, invest whatever, cash that you want into that. And yeah, there's no limit on the amount of properties you can invest in. But the reason for the 9.8% cap on that is actually from the SEC to protect investors, so that, someone can't come in and snatch up 90% of the shares, right? And then they're a majority owner of this. It's actually,
so then the little guy's out again.
Yeah, exactly. That's let's force a sale. Like, wait, I just got in last month, So there's a reason for it. I know it sounds like, why 9.8%, but that's what the SEC has said, and kind of kept it as a cap. But the cool part is, you can do it as many properties as you want. So it is really endless that you can do, or, the barrier to entry is so small, because you can get started with $100 if you're brand new to investing.
And the age limit is 18, correct?
Yeah. And I think it's, don't quote me on this, but I think any U.S. citizen or U.S. resident with a U.S. bank account can invest. So it's pretty much open to anyone that wants to get into it, which is cool.
I
right?
remember telling the boys, oh, sorry.
No, I was just going to, this is probably where you're going with it too. But I mean, imagine being like 20 years old and be like, hey, guess what? I'm a landlord now.
I know real estate. Yeah. I was telling my boys, because my oldest is just turned 17. So he has one more year before he can invest. Because he's been killing me to open an account for him so he can invest into stocks. And for the longest time, I couldn't figure it out. And now there's an app so he can be a minor with the parents' approval. And we opened his account and all that. But when RealBricks came about and I was telling him about that, he's like, no way, I can own real estate with $100. And I'm like, yes, right? So it's so exciting. Like, I just imagine if we knew if I knew what I know today, right? If I knew that when I was 17 and cannot wait to be 18 so I can invest into real estate, right? Like, God only knows where we would be today. So then let's say they go online, they create their account. I'm assuming they hook it up to their bank account right there in the app. Right?
Yep.
And then you just go and start looking at what's on the market, and meaning what's on the platform, meaning that these are properties that RealBricks already found and researched and made sure that the numbers are, the math is mathing, right? And then they can choose to invest right there. Is there an app too, or do you have to do this online?
Yeah, there's an app you can download, iOS, Android, whichever you have. And yeah, it's kind of cool. So I'll touch on something here. So like the way, because we get a lot of questions like, okay, I get the model, but like how I don't understand how like RealBricks actually works in the background. So what RealBricks is doing is basically we've got a team of really seasoned real estate professionals that have hundreds and hundreds of years of experience combined, right? And millions of dollars worth of deals that they've done. And they're the ones kind of looking out and vetting, kind of finding the deals, right? The ones that are prime and ripe for investment. They go, what RealBricks does, they go purchase those properties with cash. So, other companies, maybe, like maybe some other crowdfunding places will purchase it with a mortgage, something like that. We purchase it outright with cash. We source the tenants, manage them, handle all of the property management and everything. So like you as an investor, the burden of that is not on you, right? So all you really do is once your account's created, and again, like I said, it takes 2 minutes. You connect your bank account, you upload an ID to prove that you're a real person, and then you can start investing in these. And like it's as close to passive investing as you can get without being, because that word's thrown around all the time. I'm sure in the space, like, oh, it's passive, but like it's as close as you can get to basically being like, hey, there's a cash flowing single family rental that I want to invest in. Let's say $5,000. You invest that money, all of the legwork that's done for like, cash flowing rental properties is done for you by the RealBricks platform. They're all purchased cash. So you basically get to earn rental income, on your investment. So, I'll give you an example. One of our properties, I think the Stag, has a projected APY, like a dividend of 6% a year. So, if you invested 10 grand, right, you'd be getting paid $600 a month over the course of the year. So quarterly, you get your interest payments, right? So it's a great way to start building wealth. You can either reinvest it back in the property, you can take it out and keep it yourself. And then the other cool piece is that like that's one income stream that you're going to capitalize on, right? Is the rental income. But the second is if you buy and hold for the long term, like, as these properties start to appreciate, that's the real draw for real estate. People want to buy and hold and hang on to these things. And so I'll give you an example. A property, the Blanton that we had, we purchased it 9 months ago. I think it's a really cool condo downtown Omaha, right in the heart of it. And I think we purchased it for like 380. We got the comps back. It was 9 months later. It's already sitting at $427,000, right? So that's what, $47,000 in appreciation just in the last 9 months, which I think is like 12% return. So when you have your 6% returns on the rental income, plus, if you wait a year, and again, this is going to vary depending on your investment, but you factor that with the home value appreciation, you can really start to see over time how your investments can start to grow. And
so does the equity get paid out yearly too somehow? Like, do they refinance in these properties, or do you only actually truly see the equity value when the property gets sold?
Yeah, so that's a great question. So the way you realize the property, basically capitalize on the property value appreciation, is whenever you're ready to sell, you are basically going to list your shares on the secondary marketplace. So you have what's called the primary marketplaces, which is where all the new homes, all these new properties are coming in. You can choose to invest in them, right? Once that property is fully funded at 100%, right? Like we've got all of the equity built in it, right? It's going, you're earning your income, your rental income, right? Let's say 2 years from now, you say, okay, this property's appreciated by 18%. I want to cash out. Basically, just go list your shares on the secondary marketplace. You can set it at a price. We typically recommend just how much the home is appreciated, but it's up to you. It's kind of like a bidding system, right? So then new users can come in and say, oh, wow, look at how much this property is appreciated 18%. Let me go buy. I want to buy your shares that you're selling out on this. And so it's basically, yeah, people are buying your shares as you're ready to get out. And as new investors come in, they can purchase the shares from you. And then just like you mentioned at the beginning, that is the other way that you can exit, is like after, I think we have a target hold of like 5 to 7 years roughly. But when RealBricks says, okay, hey, awesome, we've kind of hit a plateau, let's go ahead and sell, then all users will get cashed out, for their investment. So kind of three ways.
So that was my next question. So let's say that you don't need to sell and you just hold your money in that, and then RealBricks decides to sell that property, let's say 5 years later, right? But let's say that $400,000 property now is worth $500,000, right? That what happens with that $100,000? So is the profit gets split then between how many owners there are at the time?
Yeah. So if you're let's say you're a 1% owner in the Stag, one of our properties, right? And let's say it's appreciated $100,000. You would basically earn 1% of that $100,000, which is what, $1,000, right? So it's whatever the fractional stake that you own when the property does get sold is the fractional stake that you get back out. So
that's awesome.
Yeah.
And So I know the investing is ready right now. Is the secondary market is ready too? So if someone, let's say, invest in, I don't know, something happens and they have to touch their money, they need their money back. Is that option is available now or not yet?
Yeah, so we're anticipating it's gonna be ready in Q4 of this year. So literally in the next 90 days. So how it works basically is like when you invest in these properties, right? As new users and new investors come in and purchase up all these shares, once all of the available shares have been purchased, so the house is fully funded is what we call it, it then moves to the secondary marketplace. So you have the option to sell them immediately if you want, or hang on to it for a while. So basically what we're targeting is like basically if you get in, let's say in September, we're looking at, again, as we get more properties, the time to fully funded will start to shrink. But we're looking at a 3-month time frame right now. So let's say you buy in September, by December, January, like you have the ability to exit if you wanted to. But it's tough to give a day range because it just depends how quickly those properties sell out, or if it's a property that not maybe as many people are interested in, but there's still some time to go. It's all dependent on that. So that's kind of how we determine when a property moves to the secondary marketplace.
Are you enjoying the GoGoPreneur podcast? Subscribe to my channel for more. Thank you. And you mentioned Omaha. So why Omaha?
Yeah, Omaha's, it's funny. It's like when you mention this to people are like, Omaha, like what, the Midwest, what's going on in the Midwest? But if you follow any real estate investment circles, like the Midwest is kind of quietly booming right now. So our team specifically picked, the initial batch of properties in Omaha because there's 3 reasons basically, right? So we look at historic property values and just see kind of how they've grown over time. And so we looked at comps in the Omaha market, and Omaha's seen a 9.8% year-over-year growth over the last 5 years and is still continuing to climb. So it's shown really great appreciation, all of the comps in that area. So we looked at that and said, hey, okay, this is a great market to invest in. And the average home value is still relatively low compared to the rest of the nation, right? I think it's like at $287,000. So well below the national average, but still climbing at a great clip. So that's great. So we look at historic property values. Population growth is another one that we look at. So are people moving there and continuing to move? So Omaha's growing 3% year over year. And then I think it's been like 12% in the last 10 years. So like people are moving to Omaha. I mean, I don't know if you've ever been there. I was actually just there a couple months ago, but the construction in that town is insane because so many people are leaving these massive metropolitan areas and wanting land, wanting to have some more space and things like this. So people are moving to Omaha. The airport's got a whole new like under construction. Everything's under construction, which is a good sign for property values as people continue to move there. So it's got really strong population growth, and then from a demographics perspective, that's the third thing that we look at. So Omaha's got a really stable workforce. A lot of people have like the unemployment rate is super low, and coupled with that, the eviction rates are super low. So basically, what it means is people have jobs, they can actually afford the rent, and they stay paying rent, which is really important for these investment properties. So those are kind of the 3 things that we look for in that, and that's what's made Omaha, and some of even like I mentioned earlier, some of our property comps have really grown in the last 9 months and are continuing to rise. And so Omaha's a quietly booming market, and so that's kind of why we chose for our initial 6 properties where we want to go, and it's been great so far. So that's kind of
so are they all these properties long-term rentals?
Yes, single family long-term rentals. Now, again, because we're such a new platform, we're starting small and then getting to expand. So like there's plans. I was looking at the roadmap the other day. We've got plans to expand into multifamily, commercial, and even land, right? So like the cool thing about the Real Bricks platform is that we're not relegated to just one type of asset. We can expand this into pretty much anything, right? So any type of real estate asset, like we're going to have the ability to fractionalize and offer to our investors. So, again, as we start getting more properties in and start expanding and growing like we already are, like you're going to start seeing a lot more deals pop up, outside of just like long-term single family rentals. But that's what we have for right now. But yeah, stay tuned. If you guys are listening, you're interested in those things, like those are going to be coming quickly. But that's the cool thing about the Real Bricks platform, and the way our founder built it is we can expand into pretty much any asset class in real estate that we want, and even outside of real estate, which is really cool. Like you want to talk about being able to fractionalize, like art, you want to fractionalize like classic cars, like any sort of asset class that has a store of value that appreciates over time. Real Bricks,
the Mona Lisa.
Yes, exactly.
We're gonna buy an inch.
Yeah, I own $10 of the Mona Lisa. How cool is that, right? So like, over time, like as Real Bricks really starts to grow, and we start to really double down and scale, right? Like a lot of those investment opportunities are going to be open to these new investors, which is really cool. That's why I'm so excited about it, because the potential is limitless with this platform.
That's amazing. So we do a lot of real estate investing recently, right? Because through the years, when you make money, you kind of have to do something with it, right? And it's one of the safest way of investing, and with all the tax write-offs and all that. So like when we buy real estate, we do cost segregation on it, so then we can use it against our taxable income deduction. How does that work when you buy fractionalized real estate? Like, can you use any of that against your taxable income that year? Do you know, or do you not know the answer to my question?
Yeah, no, that's a great question. It's something I've been talking with our founder about to see how we can pass that kind of tax benefit on to the user. So right now the answer is no, but I see, and I've talked with a bunch of investors that they're like, man, if I can use this as a write-off, like, hey, I have 10% or 9.8% of shares in this, like let me use this as a deduction. Like, we see the benefit. We're trying to figure out how we can pass those tax benefits along. So the short answer is no, not right now, but we're working on it. We want to be able to do that, because it's another huge benefit of real estate investing. Totally get it.
Yeah, because we did a syndication. We were talking about how not having to be involved, right? So a couple years ago, our heads were spinning, right? And thankfully, we had money coming from every direction, and we're like, we don't have time to figure out what to do with it. We don't have time to find a good deal. We don't want to deal with it. We don't want to have to go through the financing. We just don't want to do any of it. Can I just hand some money to someone, right? And then they deal with all that. So we did a syndication. And syndications are kind of good, right? You don't have to do the research. You give it to them, 5 years later, they give it back to you. Hopefully it makes you money, pays you dividends quarterly, yada, yada, or monthly, just depending. Well, with syndications, right, you have to pay in. Many of the syndications are a minimum of 50,000, if not a minimum of 100,000. And you have to be an accredited investor in order to qualify to even be able to invest, right? So that's like a whole different cup of tea. But then I think, if I remember correctly, through syndications, you get a K1 in the end of the year, which does benefit your taxable income deduction again. So if someone really, I can see this not being a huge need, right? The income tax deduction not being a huge need if you're really only just starting out and doing $100 here and $500 there. But if we really want people, but then again, we might be in the situation where if this becomes an opportunity where you can use it as a taxable tax or reducing your taxable income with it, then again, you're going to get the big investors buying up the big chunks, and then the everyday person is going to be cut out.
Yeah, for sure. No, we see the value in it. And I think, it's just because the space is so heavily regulated, we have to make sure, like, okay, how
every step.
Every step. So we absolutely plan to move in that direction, because we know that, those accredited investors, large scale investors, that's a huge benefit for them. And obviously, the cool part is, our platform is geared towards accredited investors and kind of like the newbie investors or maybe the smaller scale investors. But, we offer, basically in the platform, what's going to be really cool is if you're an accredited investor, we have an auto accreditor investor check, which, in the future, when we start expanding some of these pieces, like that's where I think some of those tax benefits, but also access to those types of accredited investor deals that only those people are allowed to invest in. Like, the platform will basically automatically divert you which way you're at. So like, the tech is built there. We just got to figure out, hey, how can we pass along some of those tax benefits? But it's definitely on our roadmap, and we want to get there for sure.
Oh, I love it. So we are ready to do today, right? You just go to realbricks.com, create your account, hook up your bank account, start investing whenever you feel comfortable, with as little as $100 per transaction, but not more than 9.8% of the total value of each property. And as soon as the secondary market is ready, which is going to be hopefully in the fourth quarter of 2024, or whenever the first property hits 100%, like fully funded, fully invested. I actually didn't know that all of these properties are paid cash. I kind of like that.
Yeah, it's great. I mean, it allows us to provide a better return, right, without having to use debt for it. So,
and the security of it, right, of not having to worry about foreclosure and those kind of things.
100%. Yeah, but you nailed it exactly. Like, like I said, we've got an app, iOS, Android. So just search Real Bricks in the App Store if you're there. The app is super slick. It's awesome. It's so easy. Like, literally a couple taps of the button, you're onboarded, and then you're ready to invest. And then we also have, desktop version 2 web portal if you want to do that. But yeah, account sign up takes literally 2-3 minutes tops. And then, I just encourage everyone, just go check it out. Like, go to realbricks.com. You don't have to invest today, but go check it out. Sign up for a free account. Again, it takes a little bit, and then just go through and look at some of the properties, and, kind of with what we've talked about today in mind, like, think about, your investment mix. If you are the type of person that's maybe putting $100 every paycheck in the S&P 500, maybe this is something where you say, hey, I actually, let's diversify a little bit. Let's go into real estate, or if you're someone that's always wanted to get into real estate and have been fascinated by it, like, this is a great opportunity for you to, start investing in properties, but also learn along the way, right? We've got a ton of learning resources, ways that we're trying to help build and educate these kind of newer real estate investors to how real estate can really work to grow your wealth. Because I looked at a study, the 100 of the world's wealthiest people, I think a third of their portfolios are made of real estate, and everything else is a ton of mix of whatever. But like, I don't think it's a secret to people, but it's crazy when you put it in that perspective. Like, the richest people invest in real estate, and they make a lot of money doing it. And so it's cool finally that there's a way for everyone to get a piece of the pie and participate in it. So
yeah. And I think it's the hardest part initially to start, right? It's like when that is your only first of all, if you at least have $50,000, right? But if that is your only $50,000 you have, it's so hard and so scary, right? To take the risk, to put it all into one basket, right? To put it as down payment in. I think hope that the AC unit doesn't go out, or hope that the renter is not going to ruin the property, or hope that they're going to make their monthly payment, because then you need to make the mortgage payment, right? So it's risky. But I feel like to finally but everyone has that ego to like, but I want to start somewhere, right? And so if you can start with as little as $100, like, well, if I lose this $100, it's $100, you know what I mean? It's not $50,000 and that's all the money that I have, right? So I think if nothing else, this should make everyone want to take action on learning how to invest into real estate. And then, you start making money, and then you have more to invest in. Eventually you can own a property all by yourself. You go out in the big world and make your down payment and rent it out and do all the work. But in the meantime, Real Bricks can do that.
Yeah,
for us.
You mentioned, like, I was on the phone with one of our investors. He was new. He's been wanting to get into real estate forever, and he had a quote that I thought was perfect. He's like, so you can get started with $100, and he's like, he said, there's no excuse then for people to not be investing in real estate. Like, everyone's got $100. We've all gotten Uber Eats for our family or our friends or something like that. $87, $90 or whatever, something like that. Like, that's the cool part about this, is that, like, if it's been a dream of yours, like the opportunity, you finally have it to be able to just dip your toes in the water. And that's what we encourage a lot of new investors to do. Just come check it out, see if it's the right fit for you. And obviously, like, if it's not, totally fine. But I think there's a lot of people that have just been trying to find some way to break into the market. Now there's finally a solution for it, which I think RealBricks does an amazing job of providing that solution for people.
That's awesome. So tell me, how about your social handle? So if someone wants to check out, not just going to the website, but kind of see your, like, I speak social language, right? Like, if I'm checking out any company and any brand or any product or any service, like, I'm going to their Instagram, right? Like, that's the language I speak. So what is the best way for someone, if they want to get to the end of your social media, RealBricks, is where to find you?
Yeah. So Instagram, we're at RealBricks app. So RealBricks, RealBricks, and then app, so app at the end. And give us some slack. We just started our social channels. We're a brand new company, right? So, like, but there's great content on there. There's great tips, in terms of, like, breaking down different investment models. Property spotlights. If you're not on the app, we post about twice weekly there. So just keeping in the loop where all that stuff's at. We're also on LinkedIn, Facebook. If you just search RealBricks, you'll find us on there. And then, obviously on Twitter as well. But those are, I would say, Instagram and LinkedIn are probably our primary ones, and probably what that have the most, value-led content. So, you guys can, anyone that's interested can, see the properties that we have, just kind of learn about, this whole crazy world, if this is new to you, around it. So, that's basically it. So RealBricks app on Instagram. And then if you just search RealBricks on any of those social platforms, you'll find us.
Awesome. Well, Taylor, thank you so much for your time today. Thank you so much for answering. If someone has any further questions that we did not cover here today, what is the best way for them to get a hold of you or how to get a hold of someone at the company?
Yeah, for sure. So my email is taylorutt@realbricks.com. So that's Taylor, and then last name is Utt. That's UTT at realbricks.com. Shoot me a message. I love chatting with new investors or even people that are just, trying to figure out this whole, like, what this is. Like, I've got a booking link I can send people. I'm happy to jump on a 30-minute call, answer emails, however we want to do it. Please reach out. I would love to talk to anyone that's interested in this and, see if it's right fit, or just even explain the platform a little bit more in depth if you have more questions. Because again, like I said, we're new. We're still just getting kind of our footprint out there. So I'm sure there's questions that people are going to have that maybe our website doesn't address, or just, questions you have in general about how it all works. Like, I'm happy to answer that. So shoot me an email. I'll send you guys a calendar link and we can hop on the phone and chat whenever you guys want.
Awesome. Well, thank you so much. And thanks for your time today. And thanks for your knowledge today.
Yes. Go. Thanks so much for having me.
Thank you. Every episode, guys, when somebody's talking about a book they wrote or a service or a product, if there is a link to something that they're talking about, it is always included with every single episode. All you need to do is go to gogopreneur.com, find that specific episode, and all the links are in there, including today's episode. Thanks for joining GoGoPreneur. Keep that go-getter spirit alive. Until next time, go get 'em.